You may be wondering about home prices and when or if home prices are anticipated to go up or down. First, know that home prices are going to be very specific to the area. Now, we lend in 45 states across the country, and I can tell you it varies, not only state from state, but city to city, subdivision to subdivision. I mean, there's so many different factors that go into home prices and evaluation. But in general, on a global level across the country, home prices as of now have stayed the course for the most part. Do we expect a big drop in home prices anytime soon? The markets are not expecting home prices to drop. However, there are always variables that could impact a home price drop. For example, an increase in unemployment rate. If people are struggling to pay their house payments, that could bring a desperation, and maybe some have to get out of the house and sell that quickly. That could impact a home price, but overall, we're not predicting that because there's so much equity out there currently for people that do own homes. Think about it. If you're a homeowner and you have, let's say, $200,000 or $300,000 in equity, and something happens in your life where, hey, you cannot afford your payment, and you've got to sell before you default. Depending on that market, it's very likely you can list your home and it is going to sell, and you're going to be able to pocket all of that money. That's what I mean by this built up equity that's across the country. So when we think about the likelihood of a price drop, yeah, you're always going to have certain situations. And another thing to keep in mind are areas that have weather. weather. You know, there are some areas in certain states across the country that are seeing an increase in homeowners insurance because of weather that has just occurred over the last couple of years. That could potentially impact affordability, which could potentially impact home price valuation. But the equity position in our country right now is much different than it was in the Great Recession. If we go back to the early 2000s, we had zero down payment loans. We had all kinds of creative financing, no income documentation, etc. All of that led up into that mass market drop where people just could not sell their homes for what they owed on it. And that created a whole cycle of declining market value. This time around, we don't anticipate that because home values rose significantly after the pandemic, so the equity position is much greater now. If you want to better understand home prices and the market in your specific state, the best thing you can do is consult and work with a local real estate agent. They're going to be the best resource for you to help you understand home values in specific neighborhoods around the area that you're wanting to purchase in. They can also help you negotiate home prices and potentially even seller concessions to help you buy down the rate, cover some of your closing costs, and create some affordability. In many parts of the country, we are still seeing seller contributions as a thing, but I'll tell you, there are other communities and states around the country where seller concessions or contributions are not a thing. And why? Because there's so much demand in those areas that the sellers are not in a position to need to give any type of closing cost credit. So when I tell you it varies, it truly does. I was talking with an associate this morning, and on her very block, she had a house go on the market, multiple offers, and went under contract in 17 days. So that's just an insight in one little neighborhood here in Arizona. And I can have that same conversation on both sides of that equation. Whether it's time on market, whether it's going under contract above list price, supply and demand based on the locale is a big part of the answer on home prices and the fluctuation in market valuation. If you can afford to purchase a home, right now is still a good time to buy because the competition, a lot of people are still sitting on the sidelines. We had a rate drop a couple weeks ago, and boy, just in that 8-day window, we saw demand jump up. We saw refinance applications jump up. We saw pre-qualifications for pre-approvals on purchase transactions jump just because of that little bit of rate movement. Now we're going into a cycle where we predict that interest rates are going to come down. Is it going to be drastic? No, it's not. Interest rates change every day throughout the day, but there are so many factors that are contributing to the possibility of mortgage interest rates dropping. And when that does, that pent-up demand that's on the sidelines right now comes back into the market, changes everything. Now across the nation, globally, we're still in a home supply shortage. So rates going lower is going to drive demand, and we don't have supply to support it. Zillow reports that the U.S. housing shortage grew to 4.5 million homes in 2022. In 2024, we haven't seen that number go lower. Now, several factors have contributed to the current shortage, including underbuilding from new home builders since the 2008 financial crisis, rising cost of construction materials and labor, increased demand from millennials entering the prime home buying years. Blackstone reports that the new home starts are an equivalent to what they were in 1960, yet our population has doubled since then. Even with an economic slowdown, prices are expected to hold because there simply is just not enough supply. So again, when interest rates come down and that demand picks up, if you're able to afford it, now is the time to buy before that happens. If you're interested in looking at specific numbers based on your situation, we lend in 45 states across the country, and we'll be happy to provide you with the data to help you decide whether now is a good time for you to buy before that demand comes back. Call or text our home loan hotline at 480-725-0150 to schedule a convenient consultation to walk through the specifics in your world. Now, if you want to keep up to speed on what's happening with mortgage rates, subscribe to this channel.